topics that matter to you. Before we dive in, I'd like to introduce myself. I'm Kathy Asmus. I am a controller and CFO here at All-in-One Accounting. I'm a graduate of the University of Denver. I have a Bachelor of Science in Business Administration, and I graduated back in 1987. I am a licensed CPA in the state of Minnesota and the state of Colorado, and I'm a former enrolled agent. I have over 30 years of experience in financial and accounting management and reporting, as well as over 20 years of experience with tax preparation as an owner of a tax and accounting firm. I specialize in working with entrepreneurs to understand the importance of accurate and timely accounting, resolving client issues with accounting, reporting processes, and internal controls. As many of you know, All-in-One Accounting provides expert financial services tailored to meet the needs of small to mid-sized businesses and nonprofits. Our team of dedicated professionals helps clients achieve financial clarity and success through customized accounting, CFO, and controller services. With a focus on building strong financial foundations, All-in-One Accounting empowers organizations to make informed decisions and grow with confidence. While we don't strictly offer tax preparation as a service, our team has a wealth of knowledge of the information that is needed during the tax planning phase to help you and your CPA get through the tax season together. I'm just going to pause real quick and ask if everybody can mute themselves real quick. All right. This is the second installment of our monthly webinar series. Last month, we hosted a session on AI and automation for professional service firms, and that was hosted by our CEO, Heidi Olson. If you missed it, don't worry. We can send the link of the AI webinar in the email follow-up to this webinar, along with some helpful resources that we hope you will find beneficial. I'd like to give a special shout out to everyone on the call today. Whether you are here as a business leader, a nonprofit executive, or an industry peer, we're really glad you have joined us. So here's what you can expect from our webinar today. In our introduction, we'll start by setting the stage for a successful tax filing season. Then we'll move into our program where we'll cover how to set your business up for tax filing success, discuss the differences between working with an accounting firm versus working with a CPA firm when it comes to filing taxes. And with the extended deadline approaching, we'll touch on what steps you can take now to prepare. And finally, we'll explore how your tax return can be a valuable tool to unlock business growth in the coming year. After the presentation, we will then have Q&A where you can ask questions. Feel free to pop questions as we go in the chat, and Sarah can alert me if we can answer them as we go. Otherwise, we can have them all gathered together for the Q&A session toward the end of the program. And then finally, we'll close with our next steps, where we will share some actionable items and next steps and resources that you can use after the webinar. As I mentioned, today's session is focused on helping small businesses who may have filed for a 2023 tax extension and what steps they can now take to ensure a smooth tax return process. Whether you're feeling well prepared or unsure, we're here to help provide some guidance for you. There are some key deadlines that you should be aware of. September 16th. Yes, we do realize that this is past. And this is the due date for partnerships and S corporations that filed an extension. We wanted to address this, even though it's past, as some of you may be unaware of the extended due date or may be still trying to file an S corporation or partnership return. Just so you know, the original due date for the S corporation and partnership was March 15th. If you filed for an extension, it is a 6-month extension. And if you have any questions about that, please be sure we bring them up during our Q&A. The second deadline we wanted to bring to your attention is October 15th, which is just around the corner. This deadline applies to C corporations, sole proprietorships, single member LLCs. And the original due date for those returns was April 15th. And again, there was a 6-month extension with that if you filed an extension. It's important to know that sole proprietorships, single member LLCs that are filed on a Schedule C or a Schedule E if it's a rental property are filed on your 1040 personal return. So they follow the 4/15 and 10/15 due dates. So if your business falls into one of these categories and you filed an extension, or perhaps you're past the due date, your tax return is going to be coming due soon, and you may have payments that come up with that. So now is the time to get everything in order. So we have 3 camps of people that we see this time of year, typically that people fall into them. We've got a happy face, a serious face, and a sad face. So the first group or first camp is the happy face people, and they have filed valid extensions, meaning that they've paid their tax estimates in a timely fashion. They have made any extension payments that are due per the IRS guidelines. Generally, these businesses are well prepared and they're well tax planned, and they are just verifying. They've chosen to file an extension because they are verifying any recent tax law changes, any tax interpretations that could affect their filing. And if you're in this camp, you're probably just looking over your accounting, getting everything together, and you're just double checking it before you have a final submission. The second group or camp may have filed an extension, but maybe or maybe not has met the IRS requirements for payments. Maybe some estimates were made, maybe tax extension payments were made, maybe they weren't. Maybe they were because you didn't know that was a requirement, or you didn't know that there were benefits to making estimates or extension payments, or maybe it just hasn't been a priority for you. I mean, business owners wear a lot of hats. You wear a lot of hats, and perhaps this hat wasn't one you were comfortable with or fully understood. But you're here, and we're glad you're here to take this step to learn more about how you can improve your tax strategy moving forward and get comfortable wearing that hat. The third group is unfortunately the sad face. Probably doesn't know they needed to even file an extension, or that they needed to make payments and they didn't know how to manage those payments. A common misconception in this group of people, is that an extension means an extension to pay. An extension to file means an extension to pay, and that's just not true. If you're in this camp, you're probably wondering if it's even possible to get your accounting done in order for the tax filing, or you're wondering how you're going to get it done in time to quickly file, even though the due date has passed. Many people I've run across have thought, well, I thought everything was due on 4/15 and 10/15. They didn't realize as corporations and partnerships had different due dates. So we hope you fall into the first camp, but if you don't, that's okay. We are here to help you better understand the process and try to ensure that things in the future go smoother for your business. So I'd like to talk a little bit and clear up some differences about working with an accounting firm, like All-in-One Accounting, versus a CPA firm. So CPA firms often equate accounting with bookkeeping, meaning they rely heavily on the client-provided data. They generally don't question the accuracy of this data unless something seems off. If something seems inaccurate or incomplete on its face, they may question it. According to Circular 230, which governs all tax preparers, enrolled agents, and CPAs, the standard that they are held to is that the information is more likely than not correct. That means they only have to be more than 50% sure that it's accurate to put it on the tax return. So it's a little different standard than maybe you expected. At All-in-One Accounting, we take a completely different approach. To us, accounting is more than just bookkeeping. We verify every balance sheet account for accuracy, cross-referencing third-party documents, and independent schedules where possible. Bank statements, credit card statements, external accounts receivable and payable schedules, inventory schedules. We do not just accept the data, we question it to ensure it's correct. We value the process of accounting, and because we do, we are deeply integrated with how we work with our clients. Another difference to note is that most CPA firms don't have the capacity to perform bookkeeping functions, and they often delegate that work to junior or non-professional staff. Could be admin staff, could be interns, could be entry-level professional staff. At All-in-One Accounting, we take pride in providing detailed, accurate accounting prepared by accounting professionals and paraprofessionals. Having accurate financials is critical to making the tax preparation process smoother. So we've highlighted some of the differences between a CPA firm and an accounting firm, and we don't want to imply that you have to choose between the two. Instead, we believe that partnering with CPA firms is the way to go. By partnering with a CPA firm and an accounting firm like All-in-One Accounting, you can expect some very significant impacts and benefits for your company. The first one is accurate accounting. We ensure your accounting financials are properly prepared, and this reduces the risk of having errors on your tax return. You have timely accounting. An accounting firm prepares accounting during the year, so we help you stay on track with tax estimates, filing deadlines, extension payments. This helps your CPA be more proactive and helps your CPA with tax planning, keeping you ahead of the game and in control of the process. We have clear communication. With our deep understanding of your business's finances, we can respond to your CPA's questions in a language they understand. And because we have long-standing relationships with CPAs, we know what they need and how they think. We understand their timing, their schedules, which makes the entire process more efficient. CPA firms are generally thrilled to know your accounting is in order, as it allows them to do their job and do what they do best, which is tax planning and tax preparation, instead of having them get bogged down by your accounting issues. So there are still some tax planning opportunities before the deadlines. Once we hit the deadlines, it's generally too late to implement most tax planning strategies. However, there are a couple of exceptions that we can talk about. The first one is the SEP, the self-employed pension plans. These can be funded by the extended due date, which means that if you filed an extension for your S corporation or partnership on March 15th, you have up to the due date plus extensions, which is September 15th, to make the payment to fund the self-employed pension plan. The second is an IRA. It's an individual retirement account. And again, with a valid extension, IRAs can be funded through October 15th. So those are going to be for the due dates that are 4/15, original due date, and extended due date of October 15. However, you have to keep in mind that a valid extension had to be made, which means the taxes had to have been paid by April 15th. So if you haven't yet explored these options and there's extensions, make it a possibility for you to explore them, now is the time to do that before the deadline passed. And again, we recognize that the September one has passed, but we wanted to bring it up for future years, and just in case so you know what happens, that you have that extended time to file those. So let's set your business up for future success. So even if it is too late to perfect your accounting for this year's tax deadlines, we can help set you up for success for the 2024 tax season coming in 2025. So our goal at All-in-One Accounting is to provide complete and accurate financials which not only makes tax filing easier, but it also reduces the likelihood of errors and audits for your tax return. Most errors on tax returns don't come from your tax accountant not knowing the law. They come from incorrect and inaccurate accounting. So if you've got incorrect and inaccurate accounting, you could have the likelihood of higher taxes. You could have likelihood of higher audits. And if you have accurate accounting, you're on the opposite side. You can lower your tax liability. You can avoid overpaying. You can avoid penalties. And if you have an audit, you increase the likelihood that you'll have an audit with no change. So last, when your CPA receives accurate financials, they can do their job more effectively. As I mentioned, they do what they do best. And in the end, that leads for a better outcome for your business and for you. All right, so do we have questions? We're going to take a pause here and we're going to ask a few questions. And if anybody has any questions, they can put them in the chat box or speak up. And what are two questions we would ask you is, what is your biggest challenge in preparing your accounting information for your tax CPA? And how confident do you feel in the accounting information that you are passing along to your tax preparer? We'll give everybody a few minutes to think about those. We've got a quiet group today. Okay, well, we're going to pause for just another couple of minutes. Let everybody take a minute to think about and look at what we've presented so far. I think I see somebody typing a question, and then we can come back at it. So I'm just going to give everybody 2 minutes here. So Jody has chatted in and she's saying that she's found it's important to track the estimated tax payments throughout the year paid at the state level to make sure your CPA has that information reported correctly. And that is absolutely true. You are absolutely right, Jody. That is an excellent suggestion. And it is something that that certainly gets done with your accounting when it's taken care of. So Carolyn says, some challenges I've typically faced is not knowing what information is detailed that's relevant to the tax accountant needs. Yes, that is a good one. And we do have some tools to help you with that. Yes, that's a very common question. And trying to understand the quarterly due dates and estimated tax payments. Okay, so I'm going to take a minute and just answer that because I happen to know that because I do. So quarterly estimates would make the most sense if they were due 15 days following the end of the quarter. So for parts of the year, that is true. So for first quarter, which is January through March, 15 days following the end of the quarter would be April 15th. And that is when first quarter estimates are due. Second quarter is April, May, June, and it would make sense that those would then be due July 15th, but they're not. they're due June 15th. And I'll explain why in a minute as I keep going through the year. Then you have the third quarter, which is going to be July, August, and September. And again, it would make sense that the estimated tax payment would be due 15 days following the end of that quarter, or October 15th, but that's not the case. Those are due September 15th. And then filing the fourth quarter, October, November, December, it would make sense that those are due January 15th, and they are due January 15th. So why are June and the second and third quarter, why are they the way they are? Well, I'll tell you why. And it has to do with teachers and farmers. So back in the day, teachers only got paid 9 months of the year. They didn't get paid for the full year. So teachers lobbied and said, we don't want to have those second quarter estimated tax payments due when we don't have income in July. So they lobbied to get them to move to June 15th. And farmers didn't want to come in from the fields on October 15th. So they lobbied to have them moved to September 15th. So as crazy as that is the reasoning behind when our estimates are due, So fun little tidbit and fact there of why it's like that. All right, so we have a couple more here. I agree with not knowing what is exactly needed. We've created our own checklist, but feel like the firm should be providing that. And that's pretty common. And again, we do have a really nice resource for you that we can help you with at the end of the presentation that we can provide for you. Yeah, Heidi, I know you just have to be old enough to know. You just have to be old enough to have lived through all of it, which I have. All right, so let's come back and continue on. So the second part of our program will be covering key strategies to ensure that your financials are in order. Talk about some tax planning opportunities that can be maximized. And we'll touch on how you can use your tax return as a tool for growth in the coming year in 2025. So the extended due dates are approaching. So now what? Or they've gone by. So for those of you in Camp 2 or Camp 3 that we talked about earlier, the extended due dates are your current concern with the extended deadlines around the corner or past. And I am reminded of the Hitchhiker's Guide to the Galaxy of that. I love deadlines. I love the sound of the whooshing sound as they make as they go by. Sometimes I feel like that's what happens with these due dates. One of the most frequent questions we get from our clients is, do you have the capacity to get our accounting done in time for the tax return deadline? And our answer is, well, it depends. At All in One Accounting, we typically take each client through what we call a clarity process. This ensures that we can confidently stand behind your financials before they are handed off to your CPA for tax filing. It's not just about plugging in numbers. It's about making sure those numbers are accurate and complete. So our goal is to help clients achieve clarity in under 100 days, and that's about 3.5 months. However, the timeline of this is highly dependent on the state of your financial system when you come to us. For many clients, we hit our goal. For other clients, it's quicker and we get to clarity sooner. But for businesses that have complicated or neglected financials, it can take longer. So if you're wondering whether we can get your accounting done by the deadline, we would need to take a deep dive into your books, assess how close or how far they are from clarity. So we can talk a little bit about some tax planning for some cash basis taxpayers. And for many taxpayers, those are operating on a cash basis. It's pretty much too late in the game to do any significant tax planning at this point. Preparing the accounting is largely about reporting what has already happened. So what does that mean? What does it mean taking advantage of tax planning? What does that mean? Well, decisions like, can I buy assets? Should I buy assets? Can I pay my employee bonuses? Should I pay my employee bonuses? Can I give my employee raises? At what rate can I give those employee raises? Most of those decisions should have been made by the end of the prior tax year, which is generally December 31st. Most tax saving strategies require an outlay of cash before the tax year closes. And if that didn't happen, there's no way to take that deduction now. And again, we're talking about cash basis taxpayers. There are exceptions, and the SEP, which we talked about, that self-employed pension contribution is an exception that the IRS allows. It's an accrual the IRS allows for cash basis taxpayers in order to take that deduction. So that's why you can accrue that expense on your accounting and then not fund the pension plan up to the due date of the return, March 15th, plus extensions, September 15th. And so that is what really the only accrual that you can have on the cash basis that will allow you some tax planning opportunity. Most businesses that are cash basis taxpayers, the window's closed and a significant tax planning phase has passed. And right now, it's just about the accuracy of your reporting and your accounting. For accrual-based taxpayers, it's a little different. If your business operates on accrual or what we call a hybrid method of accounting, you could still have some opportunities to improve your tax situation by simply preparing your accounting correctly. That would include things like accruals. Do you have all the proper accruals made? Have you recorded your prepaid expenses? If you're a construction type company, do you have work in progress or billings in excess properly recorded? Handling these, and again, properly recording them, can have a significant impact on your tax liabilities. At All-in-One Accounting, we can help you prepare these items with precision and properly, which could ultimately mean you have a better tax outcome for you and your business. It's important to verify your accounting basis on the return itself. So while many businesses have the reporting either on cash or accrual, it's not necessarily the same as your tax reporting. You need to look on the entity's tax return itself. So especially flow through entities like S corporations and partnerships are generally on a cash basis, but they could also be on an accrual or hybrid basis. C corporations generally on accrual, but they could also be on a cash basis. So when you prepare your reports in QuickBooks, you can either toggle, for instance, between cash and accrual, or if you have CPA prepared financials or other accounting financials that are prepared for you, they can be either cash or accrual, but that's not necessarily what's on your tax return. So it's important to make sure you're actually looking at the tax return, finding the little box on the page to make sure you know whether you're cash, accrual, or hybrid, to understand what tax planning opportunities may still be open for you. So let's talk a little bit about unlocking the business growth through your tax returns. Your tax return can be more than just a compliance document. It can help unlock growth opportunities for your business. So you're wondering, how? How do I do that? Well, we can do an expense analysis by comparing your businesses with industry standards. We can help assess if certain line items are too high or too low. Are you paying too much for insurance and accounting services, for example? Or are there other items that seem out of place or not quite right in your expense analysis? We can help you identify missing expenses. This is a big one. Sometimes businesses miss opportunities for deductions and they haven't recorded all their expenses properly. For instance, are you taking advantage of retirement contributions or employee benefits? Here's the one I see all the time. Are auto expenses being recorded correctly, including mileage? We can help be sure that all of your eligible deductions are being accounted for and then presented to your tax CPA to be able to be sure that those deductions are taken on the tax return. And finally, proper classification. By having proper classification of income and expenses, you'll have a much clearer picture of your business's financial health. Your financials will make sense and tell the story of what's going on in your business. So this in turn allows for more accurate budgeting and forecasting. As an owner of a tax practice, I used to have many clients come in and saying getting their taxes prepared was like going to the dentist, something that had to be done, but they did not enjoy it. Their opinion was it was a requirement and of no other value. And I'm here to tell you that that doesn't have to be the case. Your tax return can provide a baseline for identifying areas of improvement, opportunities of cost savings, and even strategic investment in the future. So as we approach these extended due dates and deadlines, it's critical to ensure your accounting is done accurately and thoroughly. Whether you're cash basis, accrual basis, hybrid, all-in-one accounting is here to help you through the process and set you up for success. Beyond this tax season, 2023 tax preparation and into 2024 tax season, remember that your financials are more than just numbers. They're a roadmap to growing your business. You use your if you can use your tax return not just for compliance, but as a tool for assessing your business opportunities and planning for future growth. We are happy to answer any questions or set up a consultation for you to discuss any specific needs you might have in more detail. And finally, we've got question and answer, Q&A. We had some that helped through there, asked already, but I'd like to open up the floor to ask if you have any more questions, whether they're about tax filing, accounting processes, or planning for the year ahead. Feel free to ask away. I have more good stories about tax deadlines. If anybody wants to ask more about them, I got more. Heidi has said, when would you typically have to get your information to your CPAs to avoid an extension? Well, this is going to definitely vary by CPA firm. I can tell you when I did our CPA firm, it was a minimum of 30 days prior to the due date. So if it was March 15th, we had to have financials in by February 15th in order to avoid an extension. Because as you can imagine, everything accordions. You know, nobody can get their stuff done because bank statements aren't available in January. So everybody gets them done, and then you have a rush. And then, of course, you have a lull and then a second rush when you get close to the March 15th due date. So generally, you would push that back because you have a whole bunch of returns that you have to get done in a relatively short period of time. So generally 30 days, but there are tax firms that will take it a week beforehand. It just depends whether they're working 24/7 or not and what kind of capacity that they have for their staff, if they're outsourcing, all that, whether they have temporary staff. It just depends on the CPA firm. So it could be 30 days, or it could be as little as a week. I can't imagine there's fewer than that, but there are storefronts where you can go. They're not CPA firms, of course, but you could go to those as well. So we have some more questions. Is there a deadline for partnerships, S Corps to issue their K-1s? I see this piece slowing down folks as they wait for the information in order to find their personal taxes. So the K-1 is actually part of the S corporation, which is an 1120S return, and the partnership return, which is a 1065 return. The K1 is part of that. The K1 is not prepared separately. It is part of the tax return. So it is due to the federal government by March 15th, or if there's an extension, by September 15th. So it used to be, I'm going to tell you more about due dates here. It used to be back in the day that partnership returns weren't due until 4/15, and then they had an extension to October 15th. And then they changed it from being due 4/15 to be having an extension of only 5 months to 9/15, because they found that CPAs could not get the personal returns done because they weren't required to get the K1 for the partnership until the due date of the 1040 return, and so they backed up the extended due date, and then eventually they backed up the original due date as well to make those March 15th rather than April 15th. So back in the day, it was much more difficult, but now it is actually the due date for partnership and S corporation is 3/15 and 9/15. So the K1s are due at that time as well. So when they are provided, it might be about the owners distributing to the other owners, getting their K1 packages from them in a timely manner. That might be part of it, but they are being filed with the government by those due dates. So the biggest obstacle we've had is getting our safe harbor and profit sharing contribution numbers from the firm that audits our retirement account. Is there a way to get that sooner, or does it depend? Well, I think that if you have timely financials and providing that information to them, that's all you can do. The firm, again, probably has a whole bunch of work to do in a short period of time. I would suggest contacting them directly, asking, how do we get that faster? How do we get that information faster from you? I don't necessarily know what their workflow would be. And if you don't have timely financials, well, that's the answer right there. But if you do have timely financials, which, hint, Jody, I know you do, because you're with All in One Accounting, so I know that you have timely financials. But it would be helpful to contact them directly and ask them, how do we speed up the process with you? Can we give you the information along the way? Although it's pretty hard because it's a safe harbor and a lot of it depends on the results of the entire year and your payroll. So you may just be stuck with that. And they may be considering that they're looking, as long as they get it to you by the extended due date, that's acceptable. Again, because they have compressed workload to get an entire year's worth of work done in 3 months, for example, like a tax preparer would. All right, any more questions? I don't see anybody else typing. Give everybody a minute. No? Okay, well, it was fun answering those questions. I do enjoy sharing my crazy former tax life. And I'm very glad that I get to focus on accounting, because I think that's what matters. So I appreciate and want to thank all of you for joining us today. I hope this webinar has provided valuable insights as you prepare for the upcoming deadlines and the next upcoming tax season. Before we wrap up, I'd like to mention a few final details. Oh, we have another question. Or no, just a thank you. Okay, sorry. We'll be sharing the recording of today's webinar in the next few days. So keep an eye on that in your inbox. Along with the recording, we will also include additional resources and further reading, including our tax accounting for tax prep checklist. So that should help you understand that your financials are in order as you move toward tax filing season, and also give you that information about what is relevant and what your tax preparer might need in order to effectively prepare your taxes. So additionally, we're offering some office hours to answer any lingering questions you might have about accounting and tax preparation. These will take place on Tuesday, October 1st from 1 to 2 p.m. and then again on Thursday, October 3rd from 11 to noon. And you can join us via Zoom, and we'll send out the link for those of you that are interested. If you'd like to explore our timely and accurate accounting financial services, we can help make your tax preparation go smoother. We'd love to offer you a free consultation. We can set up a meeting with one of our team members to discuss your specific business needs and how we can assist you. So once again, to schedule your complimentary consultation, visit all-in-one-accounting.com/error-free tax return, or email Caleb Rusnik, that's C-A-L-E-B, Rusnik, R-U-E-S-I-N-K, directly at caleb.rusnik@allinOneAccounting.com. Thank you again for spending your time with us today. We look forward to connecting with you again soon. This concludes our webinar for today, and I hope everybody has a great day. Thanks, everyone.